Basically, in the world of taxes, right, understand that two concepts. One is accounting profit, which is the profit as per your income statement, right? And this profit will have a tax which is called tax expense. Okay, I also call it income tax expense, right? Now, income statement shows a separate profit. The taxable income is a separate income on which you apply the income tax rules, and on that, the income tax payable is different. So the tax expense is different from the tax payable. You agree with this? Because your amount of profit is different, the tax also will be different. Okay, effective rate is the rate that you are effectively paying because of this difference. Okay, let me show you the example more than anything else. This is more critical. Let's learn the concepts through this example. If you look at the board, you have revenue 10,000, cost 8,000, and therefore your income is 2,000. Okay, but as per your accounting, your revenue is 10,000 and your cost only 5,000. Why is it 8,000 here? Because they have allowed you certain cost which is not yet accrued, but you already paid it. So they allowed it for you. Okay. Example, let's say bad debts. Bad debts you have provided last year. So you won't record it as an expense this year. It'll be a write-off provision, but they are allowing you only because you have written off this year. They'll allow bad debts this year as an expense. So tax is saying, boss, your income is 2,000, but you are showing your income as 5,000. Okay, now learn carefully. What is the accounting profit here? What's the accounting profit? 5,000 or 2,000? Accounting profit.
5,000.
Fine. So first learning, accounting profit is the profit as per your books of accounts. Tax profits is your taxable profit books. Okay. Now what is your income tax charge? Income tax charge. Is it 600 or 1,500?
600.
No, it is 1,500.
1,500, sorry, because you have
Remember,
taken
yeah.
it on.
The word income tax means not as per income tax. It only means the income tax that is chargeable on your account. So what is this? What is this called as? This is called as tax payable, or sometimes we call it current tax. Current tax means current. You have to give currently so much tax. So the word income tax is as per books, current tax is as per tax. Are we clear? Now, what is the difference between 600 and 1,500? That's obviously 900. Why is the difference arising?
Because that is just on the current.
Correct.
It's not the exact what is.
Okay. No, who is responsible for this difference? Who is responsible? Is he responsible? No. Is he responsible?
Yes.
So
Yes.
the approval based for the taxable
Very
allowance.
good. Yes. So can I understand that 8,000 and 5,000, the difference is 3,000. You recorded 3,000 less. Your tax is 30%. 3,000 into 30% is equal to 900 is the reason. So you could have got the difference by even doing shortcut. Difference into 30. Further logic? Now, this amount is a difference, but only for the time being, because he's not being extra over, good to you. He's just saying, I will charge you this year, but eventually when you record the expense, I'll not charge you that year. So he may be giving you the benefit today, but you have not recorded today. You may record tomorrow. Further logic? So this is a deferred tax on this deferred expense. This is a deferred amount. So 600, 1,500, you have a deferred amount of 900. Are we clear with that? Clear? Now guys, very important logic. Let's understand this carefully. Understand this very carefully. Okay. What is the deferred tax year, deferred tax, it is 900. This deferred tax is an asset or a liability? Is it an asset or a liability? Let's
It's a
understand.
liability.
It's a liability. Let's understand. What is your tax liability today?
It's 600.
600 or 1500?
Today it is 600.
600. So everyone knows 600, agree? But what is your income tax charge? 1500. Now you agree your liability also should be 1500, but it's only 600. Why? Because the other 900 is deferred. And that deferred is called a deferred tax. Because a liability is deferred, it is called DTL. Easy? So you need to understand that he is not being extra dayalu and saying, okay, don't pay 900. He only saying, pay 600 now, 900 I will take from you later. So you need to pay him 600 later, deferred tax liability.
So basically, so you're saying in the entire year, so if our starts from March to April,
Yeah,
so we can pay 600.
you will pay only 600. But you are supposed to pay 1500 as per books.
But
so-
on March 31st, it will take 1500.
No, 600 only.
600.
Yeah, and I'll answer your question. What is the journal entry will pass? Look here, you know that your debit to PNL should be 1500 or 600. Your debit PNL income tax
600.
charge. How much?
1500.
Very good, 1500, that's the amount, 1500. But how much do you have to pay him?
600.
Very good. So if you have to pay him a liability of only 600, the other 900 is a deferred tax liability. So you'll pay him this and you'll wait for 2 years, 3 years when he tells you, please pay this.
Yes,
Sir, I did
So you-
not get it. Actually, I gave you the wrong answer of this 1500. Sorry, 900. But I wanted to understand, see, if I show the debts, bad debts in the next year, then the scenario may change, right here?
Obviously.
Okay.
Obviously it changed. So let's say you did not show bad debt this year. He allowed you. When you show bad debt next year, that time your deferred tax liability will kick in and you will show the deferred tax liability as a payment that time, but not this year.
Okay.
Understood? So that's it called deferred. Deferred means what? It is not matching today, it will match tomorrow. I'll show you the example also. So understand the entry first. You need to record only 15. You can't record because your books are as per accounting. So you are supposed to record PNL of only 1500. But your liability is based on the income tax man says. He says pay 600, you pay 600. You can't pay anything apart from what he tells you to pay. But the balance you also know is deferred. So therefore I call the deferred tax liability fancy figure. But to understand is it DTL, you need to look at the logic. I have to pay out of 15, 600, the balance will be paid later. Entry is clear? Now, same example, okay, I'll do the different thing now. Understand very carefully. Let's say same example, okay, but instead of 8,000, let's say this was 4,000. 4,000, okay. Therefore, it will be 6,000. Therefore, it is 30%, 1,800. Therefore, it will be whatever. 1,800, so 4,200. Okay.
4,000.
Same example.
Yeah.
Now, let's look at the differences. Instead of 8, it became 4 and this 5. Okay. He allowed 4. Maybe he allowed 4 because, let's say you record something extra. Not bad, it's something else. You recorded depreciation extra 1,000. He said, no, 4,000. Now, he's not recording 4 because he doesn't like you. He is saying that 1 you can take next year. As per law, you can't take 5,000 this year, you can only 4,000. You can take 5,000 next year, as per law. So you say, fine, but my books are showing 3,500. You are showing 18. Now let's understand, this is very important. What is the deferred tax difference?
300.
300, and the difference is 1,000 into 30. Now learn this carefully. This example, which is deferred tax, which is 300, is actually, he is asking you to pay more and you are supposed to pay less. So you are saying, boss, my P&L is showing only 1500, but you're bloody asking me to pay, right, 1800. The other 300 is what? You're
That is a
taking more
deferred-
money from me.
That may be a deferred tax asset which will be
Asset.
credited next year.
Correct. So you, again, I told you same thing. You have no choice. He says pay, you pay. But you say, boss, I will recover from you next year. So when he charges you less, you create a liability. When he charges you more, you create a simple. If you learn this logic, you will get every question in deferred tax right. Here you said again, remember the logic. Liability will always be what he tells. He said 80, you put 80. He said 600, you put 600. You put what he told you. The balancing figure is your decision of will I recover from the future asset? Will I pay in the future liability? If he charges you less, liability. If he charges more, asset. That's it. So don't learn these dirty formulas like if income tax is more than current tax, all that don't learn. Don't rectify formulas. Logic will help you through. I remember this topic took me 2-3 years to learn for my CA because it was so difficult. We used to learn formulas. This is not the right way. Just think of it. If he charges more from you, asset. And what is charged more? If current tax means what he asked you to pay is more than your income tax as per books, then you have deferred tax what? Asset, because he took more from you. If the current tax is less, he took less from you, you will end up paying it to him one day. That is a deferred tax. So this formula helps you a lot, but this is a logical formula you should understand. If he takes more from you, asset, less from you, liability. Obviously, asset will eventually, like he rightly said, will unwind in the future. Because if he takes more from you, eventually in the future, he will charge you also less. At that time, you can write off the asset. Are we now clear? So you got two situations. One is expenses more, so therefore he charge you less, liability. Expenses less, he charge you more, asset. Are we clear? So please learn this very carefully of how to work with it. Okay. The red is the deferred tax liability and the blue is the deferred tax asset. Deferred tax liability. Clear? And that's what exactly is. So make a quick note. You have the sum with you. Just make a quick note of the differences. Okay. And then I will show you the formula. So just make a note of this. I'll write down a few more things as we make notes. This is the most important summary form.